And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Friday. Happy Friday, everyone. October the 15th. Hopefully, if you're in the markets, they're heading your way. We've got some opportunities and some information coming out this morning. As always, I'm thinking about context. I'm thinking about risk management, and I'm thinking about trying to stay patient today. It's kind of a hurry up and wait thing. I like to usually make a little bit of money on Friday and call it a day early as far as the trading is concerned. Always have other things to do, of course. But we've got opportunities. Let's see if we can catch them. We're all out there looking for fish. It's casual Friday. I've got my safari helmet on again this morning. It's a chilly day here in Chicago. Just had the dog out. It's a little cold out there. Definitely a feeling of fall in the air. This morning's economic numbers, retail sales came out a little bit better than expected. People still out there spending more money on fewer things, it looks like. We also had business inventories, and we also have business inventories and Michigan consumer sentiment. We also had import-export prices and import-export prices and New York Empire State manufacturing number also came out. That came out a little bit lower than expected. Not really seeing any tremendous reaction in any of the markets off those early numbers, perhaps retail sales a little bit. We saw gold leave the opening range at the low of the session, and then come back down through it. We've got interesting things to see on the charts. We're going to take a little bit of a look at Delta today and what a Delta divergence might mean to the marketplace. But as usual, just kind of looking over what's going on early in this session this morning. U.S. stocks look to extend the rebound following positive bank earnings. PNC this morning beating expectations. Haven't seen Goldman yet. Haven't had the opportunity to check that out yet. But if they're following suit with the other banks, I'm sure they're doing just fine. Bitcoin has gotten a big nod, I should say, from the SEC. They're going to approve Bitcoin ETFs. That's going to drastically expand access to crypto markets for the retail traders. That's something I was not looking for because I'm distrustful of the Bitcoin. I think governments are, of course, going to be distrustful of Bitcoin. And but I think it's a good thing. The SEC is making it much more available for retail traders to take advantage of price movement in Bitcoin. That's a good thing. Crude prices continue higher as Europe and China continue to scramble for energy. But U.S. inventories, as we found out yesterday, are holding up, I guess, pretty well. And a 5 million barrel boost by the EIA yesterday. I believe that's what it was. But crude continues to move higher. It's been up into the $82 range overnight today. We're going to take a look and see what that means for us today. As always, make sure you like, share, comment, question, feedback, and heckle at will. We look forward to seeing you here. And as always, thank you very much. I'm going to put the link in for group coaching, which next week are 2 sessions. You can hook up, you can sign up for both of them if you like. I always love those sessions. We get some really good, challenging questions and ideas and thoughts about the markets. As I do enjoy my time with you in the morning. I'm glad that we're agreeing that 7:45 is a good time to get this thing started. And I'm getting a little bit more time, feeling a little bit more relaxed, getting through the charts with a little bit more time to ramble down into the trading pit. So as always, we are always looking at VIX, the dollar index, and the 10-year yield before we go to the charts. VIX down just under 2% at 1658. Equities higher, VIX lower. Dollar index up slightly off its close from yesterday at 94.01. The 10-year also up slightly off its 10-year yield, I should say, slightly off its low, slightly higher off the close from yesterday at 1.54%. Got to say good morning to everybody as always. Brian, good morning. First in the room, you win the prize. Ron, Kim, good morning. Jason, Theo, Daniel, Rob T, Drew, good morning. Felix, Januz, Vince, good morning. Happy Friday to everybody. Yes, Dylan, Jimmy Decker, happy, thank goodness it's Friday. Of course, Harry, Zerain, Alfredo, Stefan C., good morning. Goldman Sachs knocked out of the park, as we probably would have be expecting, right? Hello, please tell me, since when in New York have you been doing TPO oil profile regular session? Yes. You can on TS Trader put both sessions up separately, but the majority of the information that I'm looking at for my decisions are coming from regular trading hour session. And if you're trading crude oil, that's 8 a.m. Central till 1:30 p.m. Central, and that's the regular trading hours. So you can, however, put both sessions on as separate profiles. So sometimes you get some good information, that overnight information. Dr. VJ, good morning. Goldman crushed, good. Jerry is awake. Hopefully I am too. Nelson, good morning. Andre Khalid, good morning. And Manuel Caesar, good morning. Mert, greetings from Istanbul. Good to see you back here, Mert. We're going to see what we can see in these markets. See if we can make a little money and go have a nice weekend. All right. I think we've taken care of all that business. Let's jump in and start with the daily in crude oil. Here it is. Good morning, Patrick. Thanks for saying hello. So here is the daily chart. Pretty solid upside move, wouldn't you say? The market continues to consider supply issues with increasing demand. Of course, price is going to go higher. Upside structure, very good. Open interest yesterday indicates shorts were squeezed yesterday on that move up. We have to remember that it is rollover. Okay, we're kind of trading up near the high end yesterday of two-day area of balance. We lost 4,000 in open interest. That's why I'm saying we've probably squeezed some preemptive shorts to the upside. We're seeing continuation to the upside today. Today is, remember, rollover. I'm trading the November contract through today, and I'm going to switch to December on Monday. If you've already switched, it's okay. There's plenty of volume in the December. Just the November, first thing this morning looking, was about 2/3 as much volume over the December. So don't worry if you're trading December already. Just adjust your levels accordingly. Take a look at the 30-minute chart. Alrighty. So here's the kind of 2-day area of balance that we were in. Almost 4 days here of balance. The market taking a little bit of a break to the upside. No, big increase in open interest yesterday on lower volume. Market was taking a little bit of a break, but it does offer us a little bit of opportunity this morning in the fact that we've got some overnight longs in this market. Settlement is down here, 81.31. A lot of these overnight longs are going to be looking for help. If we close this gap, I think there may be more of a push back towards settlement before I'll start to look for any opportunities on the long side here, which obviously on the daily chart, the market is strong to the upside. We are in a buy weakness mode here. We have to see if we can't close this gap, that might be enough weakness for this market to continue. But again, yesterday we had a similar situation. Here's where settlement was coming into yesterday's session. We had overnight longs. The market opened with a gap. We closed the gap, and then once that gap closed, we saw the market come all the way back down to settlement, reconciling all those overnight longs, and then buyers came back in and just moved this market right back to the upside. Look familiar? It's entirely possible. It's a high probability of that occurring. But again, if we can't close the gap, then that's telling us we've found buyers. We're going to continue the move to the upside. Now, we were talking a little bit about Delta, and we're going to talk a little bit about Delta divergence here in the S&Ps yesterday. This is the daily chart. Of course, looks like the Matterhorn. We have a island top. We have a bearish engulfing pattern that has turned this market to the downside. We are at risk of changing that market state. We've got consolidation overall in medium time frame. We've got a trend line that we broke out of yesterday. Volume wasn't all that great. It was about even in the New York Stock Exchange, so it didn't bring in huge volume, but it at least maintained volume, which is something that the S&Ps and our equities tend to do. They don't tend to bring in huge volume on up days. The one thing that confuses me about yesterday is we suspected that we saw longer time frame buyers in the marketplace, and I'm going to show you how with Delta shortly. But we lost 12,000 in open interest. So instead of bringing new business in on this breakout to the upside, we were squeezing out some of the final shorts. The market traded basically right to our weekly kickoff high here in the S&Ps, which was 44.38, within 3 ticks of it by the close yesterday. This morning, we've got some longs. We're opening above this important inflection level, this 44.38 level that just was very attractive yesterday. And it looks as though this market is going to attempt to continue to break out above here. So, what does it look like on the 30-minute chart? Patrick, confused you too? I don't blame you. I was looking for the longer-term buyers to come in, and maybe it's the fact that the longer-term buyers were buying yesterday because they were kind of trimming short positions. It's entirely possible, but when we're looking at a continual move like this, and we have Delta that increasingly is more negative throughout the day, that tells us that our more aggressive traders are shorter time frame traders. They're using market orders to get into and out of their positions. And when Delta, by the end of the session yesterday, is about negative 12,000, okay, here's where we started, minus 18,000. Here's where we finished the day, down to about 26,000. So what is that? It's about 8,000 in negative Delta. That's 8,000 contracts that traded more on the bid than on the offer. When we see aggressive sellers like that, most of the time, if there's nothing in the way, they're going to succeed in pushing price lower. But yesterday, price continued to push higher. Zarul Zaharul. Sorry if I'm killing your name there. A delta divergence is when the more aggressive traders, which are usually shorter time frame traders using market orders, are decreasing delta over time while price moves in the opposite direction. The longer time frame just places bids and scoops up everything they can, and then once they can't get anything else bought, they just move up those bids and entice the short time frame traders to continue to get shorter and shorter until finally they capitulate, which they sort of did here right in that last 30-minute bar here, which would you consider this a late spike? Because the price kept moving even after the close and closed on its highs. So if this is a late spike and we're going to open above it and we can't close this gap, that's going to tell me that I'm going to probably be looking for opportunities to buy weakness. If we can't close the gap, we're going to be looking for opportunities in the direction of the gap. And I'm looking at the moving averages. This red one here is a 20-session exponential. This is a 50-session exponential. Okay, so delta divergence is when you're seeing aggressive sellers by increasingly negative delta throughout the session while price is moving in the opposite direction. Yes, Dr. VJ. The 20 and 50 exponential moving averages. So I'm sure that you're noticing that price has largely been now holding above this 20-session exponential moving average, treating it as support. We also have, don't forget, an important inflection level in this weekly kickoff level, 44.38. Take a look at the Nasdaq. Nasdaq is very, of course, similar. It seems to be playing a little bit of catch-up. We are above this trend line in the S&Ps. We are above weekly kickoff high in the S&Ps. At least we're going to start that way. Volume was pretty low yesterday. The one thing about the Nasdaq that I do like is we actually added open interest with negative delta divergence. I'm not going to show you that now because we just saw that in the S&Ps and we are still somewhat pressed for time, but we did have delta divergence. Delta was negative through the regular trading hour session while price kept moving higher. Adding open interest indicates, you know what, buyers are willing to come in and pay higher pricing, and if we continue to accept higher pricing, we can see a breakout above this trend line and maybe our move towards weekly kickoff high, which in the Nasdaq is 15,190. 30-minute chart. See that 20-session exponential moving average holding up nicely. Here you can really see the delta divergence here in the Nasdaq. So we started the day here, we ended the day down here. That's a lot of delta divergence. That's minus 12,000 down to minus 16 and change. So about 4,500 in negative delta against price. That's a pretty stark look there. Hey, get out of there. All right. What does it mean for us today? Well, we've got, kind of a similar situation. Is this a late spike? It happens after the regular trading hours, but it happens in the day session and it doesn't get the chance to see if price is accepted. We have settlement right here, 15,037 and a quarter. That was hard to say. And look at how packed all the information is at the high of this session here. We have it in the S&Ps as well. We've got point of control, we've got settlement, we've got value high, and we've got the high of the session here. Very target-rich environment here. Very target-rich environment indeed. If we can't close the gap, we trade in the direction of the gap. We've got plenty of space upstairs to reach weekly kickoff high if we can accept above that trend line. One of my shockers here this morning was really seeing gold pull back down below this weekly kickoff level. We were we worked so hard to kind of break out and continue to break out 2 days ago on pretty decent volume, pretty decent open interest. But yesterday, we really just kind of rotated. It was a very narrow range. It was almost a normal trading day in profile speak, and we cut off volume up here. We did add 700 in open interest, but that's not all that impressive. We're still working on trying to get through this trend line and this pullback. I think it was a little bit of a shocker for most. It could have been foretold by the volume drop, which is almost half what it was the previous day, and no real big open interest change. So that was a little bit of a hollow continuation on the upside yesterday. Where are we now? So we've got oodles of overnight inventory to the short side. There's been almost little or no effort with which to try and close that gap. What we do have is we have a lot of repair that appears to be going on from what was this Wednesday session, very toothy, lots of high volume nodes, lots of low volume nodes. Market maybe just coming back to see if there's any business left to do up here. Look at yesterday's range and value. I mean, just minute. It used up its ability to facilitate trade up there. It's looking for a new level. So a little bit of a shocker. I mean, we've got Bitcoin higher, gold lower. I wonder if that has anything to do with it, with the fact that the SEC is going to allow ETFs on Bitcoin. It's going to make it a lot more available to more and more smaller retail traders. So maybe that has something to do with it. I don't know, but I'm going to be very cautious because this 1780 level is going to be pivotal, but it's again one of those areas that if we're long above, short below. I mean, we had a situation like that yesterday where we went up to it, we cleaned out all of the overnight inventory, and then we came back up here and we sat here, and volume increased, and once we broke out above that, that was another decent pull to the upside. Where are we today? We're in range. We're currently below value. Where are the opportunities? Stay patient. I'm going to suggest, and be careful of any inventory adjustment that may pull price back up towards settlement. And the euro, a little different. We had the same kind of breakout to the upside on Wednesday, had a similar day yesterday, although we did add 4,500 in open interest yesterday. That's the difference. We have new business coming in to look at this market as a potential market state change. Today we've got an inside day in regular trading hours, in extended trading hours session, I should say. Excuse me. So the market is really still trying to look for a direction. The indecision is apparent in the doji on the daily session from yesterday. So I'm going to try and again stay patient today. We're in range. We're in value right now. We don't really have any overnight inventory with which to look for. We've got, some visuals on both sides of the market. I'm going to almost back burner this unless there's some sort of change. Because again, we've opened in range, in value. Are we going to range? Are we going to stay range bound today? It's entirely possible because the value of the euro against the dollar has not really changed all that much. We're still in value from yesterday. Try and stay patient and let the market come to you. We say that all the time, and it's difficult because we're out there looking for trades, and if we are looking for trades, we're certainly going to find some. What's going on with my chart here? We're certainly going to find some, but it's the ones that seem to come to us what's going on with this chart, but I do apologize. All right, there we go. So, market moving lower over time. Bear flag, bear flag. This measured move, which is our weekly kickoff low, which is 130.09, could certainly be a target if we break out and accept below this trend line today. Of course, everything depends on rates. Lost 43,000 in open interest yesterday alone, while the market continues to try and push higher and feeble volume. What's it look like on the 30? Here we go. We've got our bull flag. We have broken out below it before the open here, and the market tests right back to it, and then we get the continuation to the downside. So just to go back and look at where a potential target for that is down here, this weekly kickoff low, 130 and 930 seconds. If we find acceptance down there, this is the measured move we've been looking for. And we'll take a look here at the nat gas. Kind of a similar situation. We've got, coming off the highs, we've got a potential bear flag here. Okay, volume has been remaining. We added 5,000 in open interest, but showed a sign of rejection of weekly kickoff high. Take a look at this on the 30-minute chart. We got 1, 2, a stab above and rejection. 1, 2, 3, 4, 5, a breakout, a pullback, and continuation to the downside. Just kind of typical what happens with a bear flag. Be careful. Try and see if you can get a nice pullback that's close to this trend line to help you limit the risk on any trade you're going to be taking on the breakout of this bear flag. Gap rules. Do we have a gap? No, we don't. Well, maybe we do. No, we don't. This is the 8 o'clock bar. All right. So, a couple of questions. It looks like here. Yeah, Drew's telling you, if you use the ampersand, the and NQ, it'll give you the continuation chart. And thank you, Drew, for pointing that out. Kenneth, NQ institutional trading hours end at 14:30 or 1500 in Central Time. 1500, 3 o'clock is the cash close. That's when the New York Stock Exchange closes, or at least settles. So that's really when institutional trading is going to end. If you can see, hang on a second here. I'm going to show you something in the charts, and then we'll get ready to start our weekend. Come on. Help me out. Okay. Here you go, Kenneth. Okay, this is your Nasdaq. Okay. This is the 830 bar. This is when institutional traders really start to come into the marketplace. All night long, you can see how low the volume is. That's weaker hands, shorter time frame traders. Most of the business is, of course, done still during what is still looked at as the regular trading hours. This is the 8:30 bar. This is the 2:30 bar, which closes right at 3 o'clock, which is pretty close to where settlement is going to be. Right? All right. Yes, and thank you, Drew. Thank you all, as usual, for spending some time with me this week. I'm looking forward to having 2 group coaching sessions next week, Monday and Wednesday. Again, some of my favorite times of the week. Now I get to do it twice. Hope to see you there. Hope to see you have a really good day today. It would be wonderful. We're always looking forward to your success. And have a good, relaxing weekend. It's always bittersweet. We've got a couple of days without the markets, but they'll be back on Monday. Make sure you get some good rest, maybe do a little research, have a little fun, be good to each other, be kind to yourself, be kind to others. And I will see you Monday morning, 7:45 for the market forecast. Until then, I will... Oh, Dustin has got another question. Price acceptance mean? Well, Dustin, it's a long story. We got a couple of minutes here. When the market is... When you look at any market, we're looking at two-sided auction. Okay, price is going to move higher until it's viewed as too expensive. Buyers won't pay it anymore. Sellers will come in and move price lower. That's a move to the upside auction that ends and a downside auction begins. And the market goes through this gyration all the time. When we're looking for acceptance, we're looking for, is price staying in a certain area or level for a longer period of time? Time marks acceptance of price. Volume, of course, has a say in that as well. But when we're looking at like a late spike or something, when we open above an area that has not had the opportunity to spend a little time to see if two-sided trade can occur there, those are areas that we're not going to find acceptance. If we're looking here at like a TPO chart. Okay, this is yesterday's TPO chart for the Nasdaq. The market opened down here, but it didn't spend a lot of time. There wasn't a real show of acceptance in this area because the market moved higher quickly. It wasn't until later in the session where we started to accumulate time where the market started to show true acceptance. You can see this line here is the single price with the highest amount of volume, and then there's a TPO point of control you can't really see here because it's kind of difficult on this platform. But those are marking where two-sided trade are likely to occur. They're the most visited. There's the highest volume. The market spent the most time there. Oh, I'm not even showing my charts. Hello. So let me try that again for you, Dustin. When the market opened, this is the Nasdaq. The market opened above the previous range and value. Okay, value is where acceptance of price is. We opened away from it yesterday. The market opened, looked around, kept moving higher over time, and this is showing rejection of price. The part where the market is spending more time and accumulating more volume is where it is showing acceptance of price. Rejection, acceptance, excess, balance. Look at this one. Okay, here's the day before. The market opens and kind of rotates all day long. It doesn't really go anywhere. It just kind of rotates from high to low and then rotates from higher to lower here. We leave excess here. This is not a lot of time to execute here. These are areas that show excess. Price doesn't like those levels. I like to trade those levels because I'm not going to be in the trade for long before I find out if I'm wrong. And if I'm right, I've got all of this space with which to look for profit. So when you look at a profile, it's time is the constant, price is the variable. Time marks acceptance of price. Okay? I know there's a lot to absorb. There's always more to learn. I'm still learning. I've been doing this for a long time. So keep asking questions, Dustin. Come to the group coachings. It's a lot easier to spend more time talking about these concepts when we have a little bit more time. So, all right, we've got about 9 minutes before the equity open. I'm going to take my deep breath. Hope you take it with me. Have a great trading day. Have a great weekend again. Be good to yourself, be kind, and rest up for next week. Should be another interesting, challenging, and fun week in trading. I say fun because I love this. Have a good weekend. See you in the pit in a couple of minutes.